So our speaker today is Sumit Agarwal. Sumit is the Low Tak Wong Distinguished Professor of Finance at the Business School of the National University of Singapore and a Professor of Economics and Real Estate in the same university. He has an interesting career because his career spans academia, policymaking, and the private sector in reverse order. So he has started off in the Small Business Risk Solutions Group of Bank of America, moved on to the research department of the Federal Reserve Bank of Chicago, then moved to academia, first as a professor at Georgetown University and then as a professor at National University of Singapore. Sumit Agarwal has a long list of publications in high-impact journals, which are themselves high impact. And that is an attribute that should not be taken for granted. He has written extensively on key issues in household finance and in behavioral finance more generally, with special emphasis on credit cards and other types of consumer credit, mortgage debt, and consumption. So let me tell you what the typical Agarwal paper looks like. It employs a unique data set that allows clear identification of a particular mechanism and then uses state-of-the-art econometric techniques to derive and discuss important implications for policy and regulation. He's not afraid to get into thorny topics like corruption, tax evasion, money laundering today, inconsistent regulators, predatory lending, golf buddies and relationship lending, and the politics of foreclosures. So today's talk will focus on money laundering in offshore housing markets using Singapore as a testing ground. But Singapore is by no means the only island or the only place that has such problems. He studies the effects that the opportunity to park illicit wealth has on willingness to pay for a house, on local house prices that others must pay, and also the policy implications or the effects of policies on these variables. But how do you do empirical work when the very object of study is a closely guarded secret? So I will let today's speaker, Professor Sumit Agarwal, tell you all about it. Welcome, Sumit.
Thank you, Michael. That was a very generous introduction. I mean, I want to record it, and anybody who wants to introduce me, I should give them this introduction of yours and say, please use this. So right now I'm in quarantine in Frankfurt. So I'm going to be talking from my hotel room. As Michael pointed out, I'm going to talk about illicit wealth inflows and house prices. Specifically, how can we learn about this using the Panama Papers? Recently, if you guys paid attention, there was another big leakage of such papers. So I think there's the right place to look for such things: corruption, illicit activities, and so on and so forth. This is joint work with Liu Yi, who is a student, PhD student at Penn State, and my long-term co-author, Tien Fu, who is a professor in NUS. Okay. So, I mean, just to motivate this, I mean, not sure I need a lot of motivation. We know there was this Spinson leak in September 2020. I'm talking about other leaks that happened in 21 itself. But this leak, it showed that there were around $2 trillion of global banking assets that were being moved around. $2 trillion. So it's not trivial sums. And this is what has been uncovered. Imagine what has not been uncovered in terms of illicit funds being deposited or being moved around through the banking sector around the world. Within real estate, there has been some evidence, like in British Columbia and Canada, around $800 million to $5 billion were laundered through real estate just in 1 year of 2018. There is some evidence that in the UK, in London, around $4.2 billion of real estate asset has been bought using high corruption linked individuals. These could be from Russia, Eastern Europe, or even Asia. There are lots of Chinese money moving around in these kind of activities. However, research on these illicit activities is really challenging. Michael pointed this out earlier. I mean, people who engage in such activities know how to cover their tracks. I mean, that's what their whole modus operandi is, to make sure nobody finds out. They are secretive, it's typically unobservable, it's difficult to detect. And then to get actual access to data to actually track it is even more difficult. I mean, typically you can't get such data sets. So hence evidence is really scarce on in these topics. There are some studies on corruption and tax evasion. Some of these studies I have looked at, both on corruption and tax evasion. There are other studies that actually have looked at this data itself, this offshore account data, but they've looked more on the corporate side and on asset pricing side, but not really on the real estate side. Okay. So what we will do in this paper will examine the price premium in transactions that are connected to these suspicious financial flows. Next, we'll try to investigate the channels behind this movement on why this price premium is there. I will also explore some regulatory enforcement, how I can undo this kind of thing. And I will specifically study two different regulatory regulations that actually help us reduce this. And the final and the most important is the spillover. Imagine the first three bullet points were true. I showed you those were all true. At the end of the day, I would conclude, so what? Some people who are super rich, who have illicit money, they are parking that money in some real estate transaction in some country. As long as there is no negative spillover on other market participants, it could be still fine. But what I'll show you is that average person who's trying to buy a house in that market gets affected because they ended up paying a premium because of these transactions. Okay. For this, I will exploit the 2016 data leak of the Panama Papers. And what specifically we will do is we will merge the names of the people who are listed in the Panama Papers to the names of the people who are listed in transactions, real estate transactions in Singapore. Okay. Now, this is happening not just in Singapore, in Hong Kong, everywhere where people are trying to park money. I'm just giving you one evidence. Secondly, this will be way an underestimate of whatever I show, because I'm going to match names of people who are listed in Panama Papers versus the transaction. I mean, people who are really smart, they are not buying houses in Singapore in their own names. They'll buy them in their wife's name or in their children's name or siblings' name. So those I can't catch at all, because those names I can't match. I can only match the people who are listed in Panama Papers and they're buying houses in their own names. Okay, just to preview the results, what I'll show you is that Panama linked purchases have a premium of around 3.8% on these transactions. As I said, this is truly an underestimate because there'll be false controls, false matches may exist, and so on and so forth. I will also show you that these premiums are much higher for luxury properties. To give you a sense, an average transaction in Singapore is close to $2 million. So this 3.8% is non-trivial amount of money. And also remember, a lot of these transactions could be leveraged. So this is a lot of money that they are kind of using. Then in trying to get into the mechanism, I will have two mechanisms to kind of look into. One is the safe haven, that they are literally parking this money in a safe haven country like, say, Switzerland or in Hong Kong or in Singapore or other rich countries. And I'll show you that the price increases by 2.7% of the people who are employed in the Panama Papers. And this becomes larger as I look for other controls like lower CPI, higher bribery rates, and other measures of corruption. The second mechanism which I like is the straw purchases, that are they using local people in these economies? Could be a local collaborator of this offshore company they set up to use that person to buy this purchase, or they could also be using just real estate agents. So they match up with real estate agents in Singapore and use these real estate agents to help them buy properties in Singapore. So this is also some evidence. I'll show you strong evidence of how the Panama link people are not just buying it in their own name, but they're actually using local Singaporeans to help them purchase. Okay. Finally, I will show you that when they sell these properties, they also get a premium. Now you might say, oh, I buy it at a premium, I sell it at a premium, so big deal. What are you showing me? The story I have in mind is the following, that I want to launder money. I buy a property in Singapore, and that money is not yet laundered just because of me buying the property. The laundering of the money or the whitewashing of the money only happens when I sell the property. Okay. Now I'm not going to sell it to anybody else. I'm going to try to sell it to Michael, who is also linked in Panama Papers. And Michael doesn't really care if he's paying a premium when he's buying it from me, because he's doing the same game that I'm doing. So I go and sell it to Michael. I get a premium out of it. So I make money out of selling this property. But in this whole process, I actually whitewash my money, and then I can go and deposit it in a bank account in Singapore or elsewhere, and actually then use that money for other activities. Next, what I will show you is that there are two regulations that happen in Singapore. One is this, there was a regulation that mandated price reporting or cross-border currency regimes, that you could not actually, anytime you moved money into Singapore from any other country, you had to actually report it to the agencies. And I'll show you that once that regulation came into play, the premium dropped by 5.5%, or essentially it went away. I'll also show you there's some regulation that was imposed on real estate agents, because one of the story I have is the straw purchases, that they were using real estate agents to buy and sell these properties, that this real estate agent regulation came in, and that also reduced the price premium. The spillover effect is quite large, because I have evidence that within project spillover, so I'm saying within buildings, in the same building, if there was a Panama linked purchase happening, if a normal guy went into that building and bought an apartment in that building within a year or 2 years after that, they were paying a premium of around 5%. So you can see this is quite a onerous thing on the entire population, because the Panama linked purchases are causing a negative spillover. Okay. Finally, if I look at the spillover, these come out to around 0.6 to around $4 billion on average, the effect on the illicit wealth. So contribution, we'll first, the first contribution is just to document that this happens, and then we'll get into the channels and then look at the outcomes and policy implications. Okay. The two policies that I'm going to focus on is this cross-border currency reporting regime. Essentially, that happened in November 2007. And what that did is that anytime you were moving more than $30,000 into Singapore, you had to report it, which means a lot of the people who were bringing in this money after 2007, they just did not bring in illicit money because they realized this could cause problems to them. The second regulation happened in 2010. So this is November 2010, where the real estate agents said that this council of real estate agents said that real estate agents who are engaged in transactions where they're not verifying who the purchaser is, who the seller is, and where the money is coming from, then they could be fined or essentially lose their job. So I'm going to show you what happens before and after this regulation. What did the real estate agents do, and does that affect the price premium they were paying? In terms of the data, we're going to literally just merge three different data sets. One is, this is hand collected Panama Papers, where we looked at within Singapore data set, who the buyers are, what their names are, what purchases they made, everything about them from the Panama Papers. Then we'll merge it with all transactions of real estate transactions in Singapore from 1995 to 2018. 2018, we don't need it because it's too much, because the data leak happened in 2016. We only care about transactions before that, because you can imagine after 2016, these people will become very guarded. They will not do any such transactions because now their names have been revealed. So I'll stick to 1995 to 2012 when you expect to see such transactions. And 2012, mainly because I'm going to use the 2010 regulation of real estate agents and just use a couple of years after that. Okay. I bring in some additional data set on transparency indicators. This is just ancillary. It's not really important to the paper. This is just trying to show that the effects I'm going to show you through the Panama leaked papers are consistent with some other measures. If I pick up some broader measures, I'll find similar results. So this is just kind of external validation. Okay, here is the property transactions by foreigners and locals. You can see there is a big gap. I mean, obviously the foreign transactions are very small. These are the dotted orange lines. The local people's transactions are almost like 95% of the transactions. But if I look at just transactions by nationality, Indonesian, Malaysians, and Chinese, you can see the huge transactions that are happening for all those three nationalities. Here is some broader measure of nationality and also Singaporeans who are linked to the Panama Papers. So these are all individuals who are linked to the Panama Papers, and these are the transactions that are happening on a monthly basis for these individuals. So you can see huge variation. They could range anywhere from 100 to 200 transactions over time across these years by these different nationalities. Okay. So here is the raw data. I want to point out two things here. I'm breaking the data by Panama, people who are not linked in the Panama Papers with Panama equal to 0, and people who are linked in the Panama Papers as Panama equal to 1. Total transactions that I have for people who are linked into the Panama Papers is around 2,300, and obviously the rest are for non-linked people. I want to emphasize two things. One is the transaction price is $1.3 million per transaction for non-Panama linked people, and for Panama linked papers people, it's $1.8 million. Right away, you can see huge difference in the price that they are paying. If I look at unit price, it's also around 10% higher, $980 versus $1,080. That's the key measure, the unit price. Okay, per square foot price is around 10% higher if you're linked to the Panama Papers versus if you're not linked to the Panama Papers. The first line could just be they're buying bigger houses. That's why they're paying 1.8 million versus 1.3 million. And that's the big effect. But per square foot price is they're actually paying higher price per square foot on what they buy. Rest are essentially controls. I'll show you that they actually hold across these transactions. The methodology will be fairly straightforward. We'll just have a Panama dummy, and we'll show you that do transactions that happen where there is a Panama linked buyer, are they paying a higher price? And I will try to control for a whole set of controls where I could have all the property controls that I have, like floor level, unit size, age, sale type, number of property units per transactions, tenure, everything that I have in the data set. And then I will also have some fixed effects, both time fixed effect and location fixed effect. Okay, here location will be a postal code. Just to be clear, in Singapore, a postal code is around a development. This could be 6 to 8 buildings. So 6 to 8 buildings is a postal code. In some specifications, I will actually have the zip code, which is a building. So I will also include a specific zip code fixed effect to show you within the building what is happening to this purchaser. A postal code is just having around 6 to 8 buildings that were built at the same time by the same developer. So here is my baseline result. What you see is the Panama linked transactions pay a premium of around 3.8%. Here is a column 1 and 2 is when I include all the data in my analysis. Columns 5 and 6 is when I only include some propensity score matched transactions to the Panama linked transactions. So here I'm just taking the whatever I have, like 3,000 transactions on Panama linked. Then I'm going to match them on the same building, on the same date, on the same area, and same amount, and match them, and then show you if there is a premium that people are paying even on those transactions. Okay, here I'm saying what I'm trying to control for is as much X variables that I have. Okay, Here is the matching algorithm. You can see before matching and after matching what is happening. Well, after matching, if I match on, say, distance to the CBD, which is the central business districts, the district to MRT, which is the train station, distance to school, property age, tenure. If I do all of this matching, essentially my results will hold. Okay. So that was the baseline result. Now, what I'm going to do is a series of robustness just to make sure my results hold. So here is the first robustness. What I'm looking at is Panama link buyers could selectively purchase at a particular time and in a particular location. So what I'm going to do is I'm going to kind of control for that by putting month, year, and postal sector fixed effects. The story could be that, look, Panama link buyers just buy at high peak times, and that's what you're picking up. So I'm going to just have these month, year times postal sector fixed effect, which is column 1 and 2. And you can see the premium is still there. In the rest of the specifications, I will have some unobservable property attributes. So I'm going to have some property fixed effects. So here I'm going to, my specification 3 and 4 are very, very tight. So what I am doing now is looking at the same apartment. One, it's bought by a Panama link buyer, and when it's bought by a non-Panama link buyer, the same apartment. So then you can remove all unobserved characteristics of the same apartment, and you can still see there is a premium of 1%. But remember, now I'm really getting into the nuances of trying to identify this. So column 5 and 6 are also having this house fixed effects and repeat sales of these properties. So again, all of these specifications will show you that this effect is there, and it's anywhere between 1% to 4%. I can do many other things because there could be some misclassification of treatment and control, because the way I'm matching which country you come from and what your name is. So especially Chinese names, how they're written in China versus in Singapore versus in Malaysia and Indonesia could be different. So there could be some matching issues. So here what we do is we try to clean that up. So we are using property transactions by individual buyers. This is in columns 1 and 2. Okay. Then we are looking at property transactions between 1995 and 2012. So again, trying to make sure that this is before any time period where some of these mismatching could occur. And then in columns 5 and 6, we'll match the Panama transactions based on both the name and the country. As I said, there could be some issues on naming conventions of names across countries. You can see in all these specifications, the results will hold. If anything, they'll become slightly more tighter. Let me just take a second to point out this foreigner dummy. The foreigner dummy is saying that if foreigners come to buy properties who are non-Panama linked, they also pay a premium, which is expected. I mean, there is a huge literature in asset pricing that will document a local effect or a home bias effect. Here, what is happening is the locals have a information advantage when they're purchasing properties. And so they pay a lower price because they know what properties it's selling at what timing. So they may be able to time it better. So here the foreigners actually pay more. But what I'm saying is the Panama linked foreigners pay an additional premium when they buy properties. Okay. I can do something more here because I can then try to see if the Panama linked purchasers are buying properties in the central business district or in downtown area, which is Panama interacted with Central. I can also look at Panama linked buyers if they are buying properties where more foreigners live. Because you can imagine that I'm Panama linked. I know friends who buy properties who could also be linked into the Panama Papers in certain buildings. And if I control for that or interact that, my coefficient will go up even bigger. After a while, it's not the coefficient that matters because if the coefficient is 55% higher, You might say that's just unreasonable, or they may have other motives to purchase in that building. It also is possible that my data size shrinks once I make these interactions too tight. But you can see the variation or the premium goes up the more tighter the specification or the more plausible the story I make, that these are the people who are buying in high-end areas, which is the average price that you're paying is higher if you're buying in the central business district, or if you're buying in locations where other foreigners live as well, you end up paying a higher premium to buy these properties. I wanted to get into the mechanism of why this could be happening. So the first mechanism I have in mind is this offshore employment status. That could be that this is the idea of the safe haven, that you are employed, you actually have employees who are locals who you have hired. Either they could be real estate agents or people who are Singaporean who work for you, and you're using them to make these purchases. And you can see that there is this effect that you pay a higher price, not only if the Panama premium is there, but even after your employment status actually matters in determining how much premium you pay. So sorry, I was not very clear. Let me try to explain this clearly. So what we do know in the Panama Papers is your employment status. If you're a director or if you're a low-ranked employee of that offshore company, what I'm showing you is that if you actually have a more powerful title, you end up paying higher premium when you buy these transactions in Singapore. I can do this with some other data set which is generally used, but this is just for validation. I don't really like this because this is such at aggregate level. If you're a politician who's connected to the Panama Papers, do you pay higher? If you come from a country where the mean bribery rate is very high, I mean, all that is these regressions are picking up is some very broad country-specific characteristics. I actually have better measures because I know if you're linked to the Panama Papers and what your ranking is, and all our results kind of go through. These are transactions that are happening by foreigners versus locals who are linked to the Panama Papers. So it's not that these people who are linked to the Panama Papers, only the foreigners are paying more. Even the locals who are linked to the Panama Papers, you actually see their prices also very similar. Now I want to get into the straw purchase argument. Do they use locals to help them purchase these transactions? So let me pay attention to the table on the left-hand side first. Here, what I am looking at is if you're actually using a local person to buy a transaction, to buy a house, do you pay a premium? We show you that if you're using a local, you pay a premium of 1.5%. So if you're using a local person who is linked to the Panama Papers, they pay a premium. Column 2 and column 3 say that if the local uses a mortgage or takes out a mortgage, then in fact they pay a discount of 5%. So think about it. If you're linked to Panama Papers, you are a local person, but you're taking out a mortgage, then you are really not doing money laundering because you are actually taking out a bank loan and you are a legit person who just happens to be working for a company that is offshoring and being having an offshore account. So to me, that is a person who is not necessarily making an illegitimate transaction. There we don't see any premium. Column 3 is that if you are a local who is linked to the Panama Papers, but you're using your retirement money, which is the CPF money, and from your retirement account, again, we see you're not paying a premium. In fact, you pay a huge discount of around 7%. So locals who could be linked to Panama Papers, but you take out a mortgage or use their retirement funds to buy this house, we find no premium. In fact, we find heavy discounts. This kind of validates the argument I'm making, which is that the only people who are using Panama money or linked to Panama Papers and doing transactions either are doing mostly cash transactions or not using their legitimate money, either taking out a mortgage or their retirement saving. Those are the people who pay this excess or premium in buying the houses. Now moving over to the column next to it, here in the left column, I was just looking at non-agents that you're using who are Singaporeans to help you buy properties. On the right-hand side, I'm now looking at if the Panama linked individuals could be using real estate agents to help them buy properties. And again, what you see is if you're Panama linked, you are more likely, if you're more likely to use an agent, then you will take a discount on that property, or essentially, if you're Panama linked and you're using an agent to buy it, the premium essentially goes away. So the agents help mitigate this effect that we are documenting. You find this effect by using locals. You find this effect if you're buying if you're linked into Panama Papers and you're buying a property, which is an effect of 4.2. But as soon as you bring in an agent, that effect kind of goes away. This was just trying to back out that, does this make sense at face value on what we are documenting? So what I'm showing you here is that among Panama linked people who are buying properties in Singapore, who are Singaporean, only 55% of them use either mortgage or CPF, which means the other 50% of the transactions who are linked into Panama and are Singaporeans are not using mortgage or CPF. So those 50% of those people are actually doing illicit transactions, or Panama linked people are using Singaporeans or agents to help them buy these properties for half the time at least. Okay. Next, what I want to show you, do the selling price of these transactions are higher? Here we find that obviously if you're linked to the Panama Papers, when you sell these properties, you also garner a premium of anywhere from 4 to 5% premium when you sell these properties. Now, this could be because of various reasons. This could be because you're renovating these properties and as a result, you'd get a premium, or it could be there is a collusion between the buyer and seller. This is the story I told you at the beginning, that I buy this property, then I sell it to Michael, and Michael is also Panama linked. And because we both are Panama linked, he doesn't care about giving me a premium. He just says, I don't care about the 5%, I care about the 95% that helps me launder because I pay a premium of 5% to you. Okay. So here I'm going to use this first policy change in 2007, which was essentially saying you cannot do money laundering through Singapore. And what we show is that as soon as that policy kicks in, the premium almost kind of goes away. So here the column 2 is showing Panama times interacted by this policy change that says if you bring in illicit money, you have to declare it. The premium of most of these transactions goes away from being 2.4% before the policy to -5% after the policy. That's important because that shows that a lot of these transactions that were happening because of this illicit money coming in and not being regulated by the regulatory authorities was causing this purchasing of properties like this. This graph is just showing this parallel trend. There is no treatment effect before the event, which is at 0, which is in the middle of this graph. And all of this effect, the property prices going down, is happening after the event, which is regulation of illicit money coming into Singapore. Okay. The other channel is about this renovation, which I have in mind that they were used to bringing in money. And now they are not allowed to bring in this money anymore, so they can't renovate these properties. And because they can't renovate it, hence the premium kind of goes away. We show you that this could be at play, but really not, because there is an effect even after and before, because we compare the uncompleted units and the completed units, and most of this effect only is there in the uncompleted unit versus completed units. Okay. Let me talk about this collusion because that is important to me. What I'm now doing is I'm literally matching who is the seller and who is the buyer. And I'm making the argument that if the seller is a Panama linked person, but the buyer, the next buyer is not Panama linked person, versus if the next buyer is Panama linked person. So the seller is somebody who's linked into the Panama linked papers, and their buyers could be two, one who is not linked and one who is linked. And where does this premium come from when you sell this property? Is it coming from when you sell it to somebody who's Panama linked? Which is my regressions 2 and 3. If you look at the last column, where the Panama and buyer are also Panama linked to the seller. So here I'm looking at you're buying from a Panama linked seller and you are also linked to the Panama Papers. And there you see the premium jump up from 9 to 10%. So this is the story I have, that I am selling, I am linked to the Panama Papers, and Michael is buying, who is also linked. He'll just pay me a premium, he doesn't care. So this collusion story is what we see a huge evidence of, that the reason there is a price premium in selling is because everybody is linked to Panama Papers. This is essentially looking at the pre and post of this manipulation of property value. This is kind of showing if there is some pre-trend, and you can see most of this happens before the event, which is the policy implementation, but after the implementation, this effect kind of dies away on the collusion. So Michael and I will stop colluding once this this policy of illicit money coming in has to be regulated, because now Michael is afraid, should I buy it from Sumit? Because if I do, I most likely will get caught in this transaction, so I rather just not do it. Okay. I'll skip some of these. These are just regressions, just validating these results. Michael, how many minutes do I have so I can just?
Sorry, I mean, you know, you have about 7 to 10 minutes.
Okay, so let me get to this. Is the second policy essentially, that is this real estate agent regulation. And you can see even when the real estate agent regulation came in, again, the premium goes away and it becomes negative. There is a discount of the Panama buyers, and after the policy of 2.5 to 2.7%. Let me emphasize columns 5 and 6. You see a premium of 1.3%. What I'm doing in column 5 and 6 is looking at the full data. So this is data looking pre-2007 and also after the 2010 policy implementation. Now, obviously, I said that pre-2007, which was the first regulation came in, there should be a premium you're going to pay, okay? But after the first policy of anti-money laundering within Singapore kicked in, most of the premium went away. Hence, the only premium you're seeing is in column 5 and 6 and not in column 1 to 4. I hope this is clear, because that's an important point. We redid this with resale transactions. What happens to the when real estate agent regulation came in? Most of the premium goes away. Essentially, we see a discount of 4 to 5% after that policy kicks in.
Sumit, excuse me for the interruption. I forgot to say it at the beginning. I just wanted to tell the audience, we do have the Q&A function open. So if you think of questions you would like to ask to Sumit, please submit them there. And then at the end of the talk, I will convey them to Sumit. So sorry, Sumit, go ahead.
So these are just some additional robustness, which actually show you, because we are running this difference and difference estimator, if there is any pre-trends. Again, this is showing you in a table sense. I thought I also have a graph, but maybe I don't. But this essentially shows you that there is no pre-trend, there's no coefficient that are significant before the EAW or the real estate agent policy kicked in. Okay. We do a bunch of robustness on some sample analysis, excluding agent buyers, because agent buyers could be biasing some of our results because they are smart, they are savvy. As a result, they get a discount. So we are worried about that. So we just say, let's throw out all the sample that have agent buyers buying properties before and after. Our results kind of still go through. We also did a bunch of placebos. We said, okay, what if this policy kicked in 2013 or 14 or 15 instead of 2010 that we claim it kicked in, or where the policy happened? None of our results will happen in either the Panama results or the Panama placebo results. We do a few other things. There could be sample composition effects. What do I mean by that? That, the sample, so we'll use this sample of only repeat buyers who purchase both pre and post. So it could be that this 2010 policy kicked in, the people who are buying before and people who are buying after are just different people. So by doing this sample composition test, we are looking at the same purchaser before and after, we'll still see the result. The other thing could be the experience, that the people who buy before could be more experienced. As a result, they actually do better versus people after. So again, we try to redo this by comparing Panama linked repeat buyers and non-Panama linked buyers pre-policy. So again, these are just robustness to make sure our results are not being driven by some other mechanism, but purely this policy that we have. Other robustness tests we did is to show if this result is driven by some house price gains or drops. That cannot explain our result. I'll skip this heterogeneity. I will then just show you the spillover. The spillover results are what I want to emphasize here is I want to look at a Panama linked buyer purchasing a property in a building at time X. Then I'm going to look at relative to that, the next year, the 2 years after that, what is happening to a non-Panama linked buyer buying a property in the same building, who is a local Singaporean, are they end up paying a premium because of that? And here are the results. It's if you pay, look at columns 1, 2, and 3, and especially start looking at relative to year 1 plus 1, you see they also paying a premium of around 3 to 4%. But before the Panama linked buyer buys a property in that building, there is no premium. So after they buy it, there is a premium in that 1 year afterwards. There is a small premium even 2 years afterwards. We do this in different ways. We change the location spillover to 150 meters to all the way 1 kilometer. And you can see most of the effect is there within 150 kilometers. And as we go up to 1 kilometer, this effect kind of dies away, or there is no effect. Most of the effect is essentially there up till 350 meters. But even that, it is declining from 7% to 5% to 3%. Okay. We do a lot of other things. Because I'm short on time, I will try to just talk through it. What we then try to do is we try to overlay the 2 policy changes that I talked about. One is the anti-money laundering policy and the real estate regulatory policy. And I'll show you that the spillover also kind of goes away once these policies kick in, which is kind of expected. I've already shown you that when these policies kicked in, the premium that the Panama people were paying kind of goes away. As a result, we should also expect the premium that was there in the spillover should also not be there. And I show you in a lot of these regressions that they go away. This is to convince you that, look, what we are documenting is causal here. It is because of the Panama link purchases that there was a premium. And once the Panama link purchases go away, the premium for the Panama buyers goes away, but the premium also that the other people, or the externality of that premium on others also goes away. So in conclusion, I want to make a couple of points. We actually use this very cool data that was this Panama linked leakage that allowed us to match individuals to real estate transactions in Singapore and show you that they were paying a premium of 3.8%. Again, the idea I have is I have all this money sitting around. I want to wash it, clean it, and store it in Singapore. I buy this property. I don't care about paying a premium of 3 or 4 or 5% because 5% is not important to me. It's the 95% of that money that will allow me to, when I sell the property, to clean it and then put it in a bank and then use it for other purposes. And these are big transactions, anywhere from 1.5 to 2.5 million transactions. We find there is a negative spillover on other people because of these transactions. But more so, we find that when we have policy regulations, either through anti-money laundering or through real estate agent regulation, all of this kind of goes away. So there are ways, even in Cyprus or in various countries, where these kind of transactions are happening and taking place even today. Because we just uncovered this through Panama Papers. This is happening all the time, okay? What we uncovered maybe is just tip of the iceberg. So if we really want to get into it, we need to start digging and looking at many more such leakages or data sets. I'll stop here and let you have questions. Otherwise, I can talk even more about this because I skipped some of the results in the interest of allowing you to have some questions.
Thank you very much, Sumit. This was extremely interesting, as usual. So we already have a couple of questions from the audience. I want to encourage more people also to ask questions if they have them. So one question that we have from Katerina Panayotopoulou is, you have used Panama Papers. What happens if we don't have the luxury of having Panama Papers, right? Disclosures, etc. Are there signs in a housing market that could, lead us to suspect that these things are happening, and that there could be some policy reactions, etc.?
Rather difficult. I think there is one paper by Tarun Ramodaria who actually looks in London where he starts to look at, are there enclaves of people who are from Russia or China or Middle East and various places who are buying properties in these locations, because in those countries they can in London they are buying, and are they paying premiums? And then he tries to understand why that premium is there. That's more like an indirect way, but if you really want to make this argument that there is this effect, I mean, if we didn't have the Panama Papers, we'll never find out this kind of stuff. So it's difficult. There is another paper in China I looked at where I was able to look at transactions done by banks, and I would show that people who are actually government officials, they were being given these lines of credit by this bank that were higher, and they were defaulting on these lines. So I mean, these things take effort to uncover. They are not easy. If they were, there will be no illicit transactions.
Yes, absolutely. I think then in this same spirit, Thomas Dutra Schmidt asks if there are plans to perform the same analysis, including information shown in the recent Pandora Papers leak, if comparable, information and data are available there.
I think this is the reason I'm presenting this, so that Thomas can take the Pandora paper and figure it out if this is happening in Europe or any other place. I bet it is happening. It just takes a lot of time and effort to matching these things. But I will encourage Thomas and anybody in the audience to take up the task and see what is the effect of this on European markets. Remember, the key point to me is the spillover, negative spillover. So if you can document that this is happening in Frankfurt, and what is the negative spillover or London, I think that will be huge.
Mm-hmm. Let me ask you something. I was thinking, you analyzed policy changes, important policy changes in Singapore and the effect these have. But of course, there may be also important policy changes in the country of origin of these people, at least the foreigners coming in and bringing money in. And I know, for example, that Russia relatively recently sort of pardoned people who had money abroad, and they could bring it in without any, consequences, without any questions asked, etc. And countries like, in Cyprus, for example, has observed that Russian funds are leaving, that there are sales of places, etc., as a result of that. Because that could be, another project or another, if you like, confirmation of your findings, to check policy changes abroad and to look at sales and if there is any link, any encouragement of sales by such policy changes.
So I think maybe it will not work through Panama Papers, because the fact that they have already created these offshore accounts, they have already taken care of whatever policy changes that would happen in their country. Okay. I mean, the basic question is, why do you create these offshore accounts? Because you just don't trust the political system. Even if the political leadership in your country says today, look, bring back the money, don't worry, it's safe. Tomorrow, you never know who the leader is and whether you are favorable or unfavorable to them, and they may still catch you, because there is no trustworthiness among. So you will not change your behavior because of that. That's why you created this Panama accounts to begin with. Hence, you only care about policies where the policies are credible, which is Singapore. That's why we studied these policy changes. Imagine we look for policies in Indonesia or Malaysia. First, governments change all the time, and you could be bribing them, the politicians. So those policies may have no effect anyway for you.
This is a good point you're making. As a matter of fact, it seems to create. I mean, I see the point you're saying. The Russians are trying, do these things, are trying to hide something, to conceal something, and of course they don't want to be caught, etc., etc. But somehow Russia, in particular, seemed to make a credible commitment that they forget about it, and you just bring it in. So it's not important, and there was reaction. There was departure of funds. So it's not impossible, but of course the considerations that you are mentioning.
I mean, I'll give you an example of India. So India said, look, did the opposite. They said we will do global taxation of income. Okay, and essentially they were trying to use that to bring back money back to India, because now the foreigners Indians will realize, I don't need to keep my money in Singapore or in Hong Kong or Switzerland, because they'll be taxed anyway. So what do? First, in fact, offshoring goes up before the policy kicks in. So it kind of works in the opposite way for the government, because they were hoping that this will bring back money home.
Yeah, of course. Now, Sumit, you also gave a couple of times the example where you implicated me, and I want to say that I'm not linked to Panama Papers in any way, so but nor is Sumit. But have you looked at duration, for how long they have been keeping, this property? Because obviously, your very example suggests that there is an incentive to move quickly, even, right? Some collaboration across people that are in the same business. Have you looked at that?
Yes, we did. In fact, I'm surprised I didn't present that result, but on average, they sell these properties 2 years earlier than the non-Panama linked papers. I mean, that's one of the reasons, or a way to wash the money, is to buy it and sell it, and this allows it. I want to be cautious on this point, because specifically, this is specific for Singapore context. What happens is, if you sell it too quickly in Singapore, then you actually have no ability to get those capital gains, or you have to pay some stamp duty on it. So that may prohibit you from selling it within a certain time period. But let's say in other countries, UK or in Germany, if there are no regulations, you'll just buy and sell it within a few months, because it's not important the duration or the loss you may take on this buy is the conversion of the majority of the chunk of money to white money.
I mean, in some countries, and Cyprus is an example, there is this issue of golden passports, the sale of passports, which I find incredible. But anyway, the sale of passports to people who are bringing a lot of money in. In such situations, there are two premium, right? There is the money laundering premium, but there is also the citizenship or the passport premium. But Singapore, from what I understand, is really clearly the money laundering premium.
Yes.
There is nothing additional
No.
there. Mm-hmm.
Nothing like that.
Yeah.
Or at least not that I know of. Actually, there is nothing like that. I mean, I pretty much know what's going on. So there's no second layer of premium that could be going on.
And would it be possible also, because you have these results on mortgages, etc., would it be possible for somebody with illegal funds to open a bank account that is somehow concealed, etc., and then have the bank give them a mortgage to buy the house, and that immediately cleans it, right?
We don't look into it, but your point is that I think if they're taking out a mortgage, then they are not really cleaning the funds, because if you're, say, leveraging the transaction and using 70% of the government of the mortgage money, then you're only using 30% of your own money and you're only cleaning 30%, even though that gives legitimacy to that 30% of the funds. But banks then will start asking questions. Where does the money come from? What used to happen before 2010, the real estate agents never asked you anything. If you brought in $1.5 million cash to buy do a transaction, they said, go for it. I mean, I'm going to make my 2% on it. I'll just be happy.
Yeah. I think that's where, the regulation, the bank regulation kicks in, and then, they have to know their customer and they have to ask the questions. I think in older times, more was possible along these dimensions.
Well, let me take up Katrina's point, because she was trying to get at, look, how would I go about doing something like this?
Yes.
So Katrina, let me kind of try to tell you, how would you do it? Forget this, I'll give you a different example. Let's take a setting where I know all the ATM transactions in Frankfurt by people. Okay, Frankfurt may be a bad example, but let me just take that could be Cyprus or Turkey or India. And I know for Delhi, all ATM transactions for a given bank by people. Now, I want to understand if there is corruption happening in Delhi. What I will do is I will look ATM by ATM machine and look if the pattern of withdrawal is similar or different. And if the pattern of withdrawal in the ATM is different and it is close to a police station or a courthouse or some government official building, there I would expect the pattern of withdrawals to be different, mainly because that's where you have to pay a bribe to an official, and to pay that you have to go to an ATM machine. And just using the ATM data, you can back out the corruption menu of that office building. How do I know this? Because once I was in India, I had to pay somebody and he said, oh, you have to give me this much money. I said, I don't carry that kind of money. He said, go to this ATM machine and withdraw the money from there. So specifically, these government officials know where you should go to withdraw the money to give it to them. And that can tell you the pattern, and you can use that to back out corruption. Now, obviously, this will not happen in the evenings, or it will not happen on weekends. So you can actually do falsification and show that if this is happening during weekdays, during certain ATM machine locations that are close to some things, help me back out. Now, I didn't require any fancy data, or I didn't require any leakage of data. All the data is there, and all this data is there that you can get from a bank and just use it to figure it out.
Thank you very much, Sumit. Our time is up. I hope that this talk gave more suggestions for research and less suggestions to money launderers on how to do it. But it was certainly very enjoyable, and people who could not join today can also watch it on YouTube. So I would like to thank you very much for a highly stimulating presentation, a very interesting paper. And of course, I would like to thank all the attendees for their participation, for their questions, and for joining the IMFS Policy Webinars. So until the next time, enjoy and stay healthy.
Thank you.